welcome. I want, but we'll talk. I'm gonna talk to y'all a little after the call. Um, yeah, hang around for a few minutes. Yeah, you can't beat that barber. Boy, I'm telling you, she be quick draw. Ah, yeah. So let's get into another training, everybody. And we had another week where we had to cancel the call, so we had time to do some reading, some studying, and go back and watch the call, all of that. So, um, Barbara, can you kick us off in our normal, proper fashion?
Yes, sir. So here's our disclaimer. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
Awesome. Thank you, thank you, thank you. Well, we have the fabulous Dr. Mel with us tonight. And let me check in with Dr. Mel, see if she want to cover the quiz.
I would absolutely love to.
Oh,
So our
thank you.
first our first quiz question. When trading futures, if you are not careful, you can over leverage and find yourself on margin call. What can you do to possibly prevent this from happening? A. Use a wider stop loss. B. Limit the number of positions you have in the market. C. Know your exit strategy before getting in the market. D. Liquidate some of your positions. E. Limit your risk. F. Be a thrill seeker. G. Not sure. Let's read it again. When trading futures, if you are not careful, you can over leverage and find yourself on margin call. What can you do to possibly prevent this from happening? Okay. Use a wider stop loss. Who said use a wider stop loss? Nobody said use a wider stop loss? Okay. Does anybody know why using a wider stop loss is not the answer? Not
To me, you just increase your risk if your stop loss is extremely wide.
very good. And
Yep.
so it'll take you into a greater margin call, correct?
Correct. Yep.
Okay, awesome.
Very good.
B, limit the number of positions you have in the marketplace. I see some B's. Okay. So if you limit the number of positions you have in the marketplace, what does that do to your account? You guys can, I'm not doing all this reading. Unmute and let's talk this out.
It'll slow down your risk of loss. So um, if you change your risk, you will not risk a lot. It'll save your funds.
So limiting the number of positions you have in the marketplace limits how many maintenance you're going to have
Lim-
for each trade. Because your
Correct.
maintenance is what the broker is looking at, why they're saying you're on margin call, meaning you don't have enough in your account to cover all your maintenance fees for all the different positions you have. So limiting the number of positions you have in a marketplace, that could be a way of preventing a margin call, meaning you're not putting in more, taking on more trades than you have funds to cover the maintenance fees along with the stop losses. So good. C, know your exit strategy before getting in the market.
Yes.
Yes.
And
Yep.
that's a way of preventing a margin call.
I
And
would say yes.
Knowing your exit strategy before getting in the marketplace. Well, I guess if you know your exit strategy before you get in the marketplace, you wouldn't be on margin call.
Right.
Okay. All right. So let's go B and C. Next, D. Liquidate some of your positions. So this is prevention now. Now that you're in a margin call, you're liquidating positions, but preventing a margin call. Would liquidating some of your positions prevent a margin call?
It's too late.
Okay. And then limit your risk.
That's the one I picked. Limit your risk.
Yeah. What can
10%.
you do to
Start out.
positively prevent having a margin call? Limit your risk. Limit your risk sounds really, really good. Being a thrill seeker?
nope.
Absolutely not. That's going in the opposite direction. And who's not sure, even after we've had this conversation still? Anybody still not sure? Okay, great. All right. So the possibilities we have are B, limit the number of positions you have in the market. Know your exit strategy before you get in the market. And E, limit your risk. So, Delvin, were you thinking multiple ones or you had a main one on this question that you thought was your mindset for asking the question?
Oh, y'all did exactly what it should, what you should do. Is multiple answers because there's multiple things that should help you prevent being in that position. So, y'all did great job.
Awesome. Thank you, sir. Thank you. Second quiz question. When trading futures, if you are not careful, you can over leverage and find yourself on margin call. Isn't it? Oh, somebody else. I'm sorry. I'm like, why am I reading the same thing twice? Somebody copied and pasted the question with their answer. Forgive me, folks. Quiz. The initial margin required for a futures contract must equal the maintenance. True, false, maybe, not sure. Question again. The initial margin required for a futures contract must equal the maintenance. Is that
False.
true, false, or maybe not sure?
False.
Anybody think this is true?
Mm.
So don't forget, your margin is your deposit, your maintenance is your balance, right? The initial margin required for a futures contract must equal the maintenance. So I've yet to see a contract where they both are equal.
And they never will. They never will be equal.
Thank you, Delvin. All right, I think that's it for the evening.
Actually, Dr. Mel, we had a week where we had to cancel the call for the weather, so we had two
Oh,
weeks
okay,
of
so we have some
quizzes.
more. Okay, I'll go back further. Beautiful, beautiful. Okay. Let's see here. I found one. The futures exchanges set the margin and maintenance requirements. This is usually determined based on the volatility in the market. Brokerage houses have the ability to adjust the margin and maintenance if they so choose to. Is that false, true, or is there anyone not sure? I'll read the question again. The futures exchanges set the margin and maintenance requirements. This is usually determined based on the volatility in the market. Brokerage houses have the ability to adjust the margin and maintenance if they so choose to. False, true, not sure. I see a true. Anybody think this is false? Okay, so I guess the trues have it.
True. Yep.
True.
Dr. Mel, if you
Yes.
don't mind, can I speak on this for a minute?
Please do.
So I want to make sure we get something clear, just to make sure everybody's clear on this. We had an answer, and someone answered and said that if the brokers' houses were able to adjust the margin, this could cause havoc in the market. And I want to speak on this just so I can make sure everybody understands how this doesn't affect the price in the market. Okay, so when when exchanges set the price on the margin for a particular futures contract, and then the market becomes volatile, or either the market was volatile and then the market comes down, either one. The broker houses do have the ability to adjust the margin if they feel or see fit. And when they do this has nothing or no effect on the price that futures, whatever futures that is, that whatever price is trading at in the market. Adjusting the margin won't affect the price that commodity is trading at. So I want to make sure we all understand that. We actually had a perfect example of this on our advanced call out six-figure club one time. We were looking at micro ether on bar chart, and we saw what the margin was on bar chart. And a couple people unmuted and said they were looking at their platform, and the margin was a lot more than what we see on bar chart. And that's because that broker house probably made an adjustment to the margin. They have the ability to do that. So I just want to make sure everybody understand that.
Mm-hmm.
Thank you, Dr. Man.
Thanks, Delvin. The next quiz question. When you are trading in the futures market, you must have the margin maintenance in your account in order to enter the trade. What do we use to substitute these two words? Minimum, maximum, premium price, deposit balance, not sure. Question. When you're trading in the futures market, you must have the margin and maintenance in your account in order to enter the trade. What do we use to substitute these two words?
Deposit
Minimum, maximum.
balance.
Excuse me?
I'm
See,
sorry, I didn't realize you were reading. I said deposit and balance.
Deposit and balance. Excellent. Anybody think differently? Deposit and balance it is. I think that's it. Correct? Yep,
good. Thank you.
that's it. Good job, everyone. Excellent job.
Mm-hmm. Awesome. All right, Barbara. Are we on a second part, or just a new training on a different lesson now?
This is a new training on a different lesson.
All right.
So tonight's lesson is navigating through barchart.com. This can be found all throughout the manual, but deeply explained in lesson 8 of the manual in Futures and Commodities 101.
Okay. Everybody got registered for this retreat. We're not waiting till the last minute, right? Everybody don't got registered. Okay. Guess everybody don't got registered. Cause I know y'all not gonna miss this.
I'm not registered
Pastor,
yet, but I'm coming.
Oh, nice.
yeah, can't wait, Pam. I thought I saw you say you were coming in the chat one time. So yeah, glad to.
Yeah, I hadn't registered yet.
All right. Yeah, Renee, I want to see her in the building too.
Will do.
So, actually, guys, I can't wait for this. I'm just trying to keep my level of excitement, under control, but I cannot wait for this. So we've had some great retreats, but this one coming up right here. Trust me when I tell you this is gonna be the retreat. You don't want to miss it. So please don't wait till the last minute. Get registered. When there's too many people, we already don't cut it off. So don't wait. All right. Well, this book sold out, ain't? They don't have no more copies, do they?
We still have some more copies. You can
Oh,
buy it almost anywhere they sell books. So that's the good thing about it.
okay. So let me say it this way. Does everybody understand that the trainings we do on Sunday night are on the lessons that's in this manual? Everybody understand that?
Yeah.
So it will make sense to have the manual that we're doing the trainings on. So everybody, if you don't have this manual, I recommend you do yourself a huge favor and get you a copy of this manual because it's in way more detail than what we have time to talk about and go over on these calls. And if you get it, please do us a huge favor and go back to the site you got it from and give us a review, please. We would definitely appreciate that. All right, Barbara, do some house cleaning before we get started.
All right, let's give special thanks to the CME group for their videos and their education. That is CME group, and they're the largest exchange we know. So we use a lot of their material. So we acknowledge them, and also barchart.com, rightfully so. Their website and their education. They're the leading provider of real-time stock and commodities data. You look at any financial channel, usually barchart.com is the website that they're using. So they're very prominent in the financial arena. And we did have homework. We asked them to watch before we navigate over to barchart.com. We asked them to watch the movie Limit Up. So I didn't know if you had any questions about that.
Yeah, I wanted to know if anybody did the homework. Did anybody watch the movie? Who watched the movie Limit Up? Oh, you watched the movie? Are you able to unmute and tell me what your takeaway, what you thought about the movie? Is that Miss Solar?
It was very interesting. Old
but I did learn a lot, and it was a this young lady was eager to get into the trading business, and she thought maybe she was so anxious that she was willing to sell her soul to the devil in order to do it. But it turned out that the devil was her guardian angel protecting her all the time.
Real good twist in the end, huh?
Yes.
Well, let me ask you this. I appreciate you sharing with us. Did you in this movie did you notice anything that you had learned on these calls? Did you pick up anything from the movie that you had already learned and heard?
Yeah, let's see if I can recall. Um,
Well, let me help you out. Let me ask it this way.
uh-huh.
Remember on lesson when we go through lesson two, Johnny B talks about the fact that there are two type of traders.
Oh,
Uh,
yes, 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 because they did mention that.
so did you notice that these two guys, both of them had a different type of style the way they traded? Did you notice that?
They did, yeah, they were very different in their style.
So
You
Chuck was the older guy, and he
okay?
liked the tips. He liked the tips that he was able to get from Casey. What kind of trader was he?
Mm, tips. Um, oh gosh, yeah, that I
The one
recall.
with the little piggy.
Yeah, I just don't. I forgot the name of what you call that type of trader. I remembered that character though.
Somebody help her out. What kind of trader was Chuck? He liked the tips. He liked for Casey to give him the hunch and the tips on what's gonna happen in the market. What kind of trader
Fundamental.
was Chuck?
Fundamental
Yeah,
trading. Yeah.
fundamental. Okay,
That's
thanks.
right. Now Marty was the guy who told Casey he didn't want her tips. He said he liked to trust his charts.
Oh,
He looked at his charts.
right.
Technical.
Yeah.
Technical.
Hmm.
Yes, and that's what Johnny taught us about two different traders. We got a chance to see it in this movie firsthand, where we had a fundamental trader and then we had a technical trader. Any question you want to ask Johnny about the movie before we go? Johnny still with us?
Yes, I'm here.
Oh,
Oh, I thought they were going to ask me a question.
oh no, I wanted if you had any question for her about the movie because we
Oh,
also got we
my
also got
fa
a chance to see a couple things in this movie, right?
yeah, my favorite statement is if I had a Nike with me, I could be a good trader too, you know. If I could have that guardian angel I was playing. Um, oh, there's so many things that come out in this movie. One I get a kick out of is what was the price of soybeans uh, during the movie, you know, and how does it relate to today's price? But more importantly, uh, what did they say about soybeans as far as the importance of soybeans uh, in the commodity trading world?
Ooh, ooh, ooh.
I'm sorry, can you repeat?
What did they say about soybeans as it relates to commodities in the trading world?
Let me,
Something
let me,
about its importance.
let me give him a little hint, Johnny.
Okay.
So, so Casey had this gentleman she worked for, and he ended up firing her. But before he did, she met him in the hallway, and she was telling him how bad she wanted to be a trader. At the time, she was still a runner, and and she stopped to talk to him. This is where Johnny is asking you, what did he say about the soybean market to Casey?
Soybeans is the most important commodity.
Absolutely.
Absolutely. And at her wedding, what happened? At her wedding, what happened? What kind of delivery did she get? What kind of wedding present did she get?
A whole dump truck full of soybeans.
And that was to illustrate that if you don't close out um, an order, that you'll take delivery, which isn't really true. But
Well, one last question, and we'll get into tonight's training. So when we when we talk about the futures contract, and we also go to what's called the specification, we've covered and talked about the fact that the specification gives you all the details about the futures contract, and in the grains, when it comes to the grains, 1 cent equals how much in corn? Anybody tell me what's the point value for corn? 1 cent equals how much? How much is 1 cent?
most everybody should already know
Quarter
this.
no way.
Okay, I'm gonna
Is
help
it
you all out.
8 cents?
$50.
No, $50.
That's what I said, $50.
Yeah, every cent equals $50. And that's the same for wheat, that's the same for soybeans, and that's the same for oats. So in this movie, it would trade soybeans. So if you saw that one particular day where after Casey had began trading, she started to get her confidence. And she had a day where she was really excited when they walked out. They were all excited when they walked out of the exchange because she made a lot of money. I think it was $400,000 or $500,000 she made that day. But if you paid attention to the market, soybeans closed up 2.25, or either 2.5. It was 2.25 or 2.5 cents. So how much is 2.5 cents if 1 cent equals $50?
150, 2.5 cents,
Mm-hmm.
50, 50. That's 100.
125.
Mm-hmm.
Yeah.
125.
There
Yeah.
you go, 125. So the market went up 2.5 cents, and Pam said that's $125. And I just said she made $400,000 or $500,000 that day. So if the market closed up 2.5 cents, how did she make $400,000 when that should be $125?
I would say, me personally, Delvin, I would say a lot of contracts.
For a lot of volume.
And
Well,
that's
she never
absolutely,
closed.
and that's the answer, John. She had a lot of contracts, right?
3,200 to be exact.
Wow.
Yeah. So when you trade with that many contracts, you don't need the market to move for. So remember Johnny taught us about the small speculators, the large speculators, commercials, and the
Yeah.
producers.
Yes.
Yes. Yeah, I remember.
They also had us part in this movie where they talked about the fact that somebody was buying 10 million. Anybody remember that in the movie?
Merrill Lynch.
Merrill Lynch buying 10 million. Was that a small speculator?
No, not at all.
No.
Not at
No.
all.
Why don't we get
Uh,
into the contracts and we can show some of that
yeah.
into that.
So if you haven't watched this movie, go back and watch it. Take time to watch it. It's gonna be not only educational, but it's entertaining too. All right, Bob, what you say we doing tonight?
Navigating through barchart.com.
Oh man,
This
barchart.com.
where she's expert.
Now,
I'm no
Bob,
expert.
Bob, let me ask you something about barchart.com. Do we got to pay for this?
Absolutely not. You've been trading for
Look,
over 30 years and you've never paid for it.
$200 a month.
If you want to.
You can pay for it though. If
Yeah,
you
buddy.
like, you can, but you don't
No,
have to
you
though.
don't have to pay. So
Yeah. And tomorrow, I'm gonna ask you a question before we get into this. You registered for a free account on here, right?
yes, sir.
How long did that take?
It wasn't even 5 minutes. It wasn't even 5 minutes.
Yeah. Everybody should have a free account. Barbara, talk to us about bar chart.
So, when you first come on to bar chart, this of course is the home screen. I'm logged in, so that's why it says my account. But if you're not, you would log in here, or you would come and create an account here, and then it takes them less than 5 minutes, like Jamal said. The reason why you want to use this when you're logged in, because if you go to view charts and you do any work on them, it doesn't save once you leave that page. So you want to make sure you're always logged into this first. Of course, there's a lot of other things up here you could trade, but we focus on futures. So we want to click here on futures. And the good thing about bar chart, they have the same tabs throughout the website, so you'll see that as we go through it. This is commodity groupings. We usually go here first. These are a list of all the commodity groupings that you're going to see, but I'm just going to double click on that futures, and so it gives you futures market overview. I'm going to click here where it says full list. And this takes me to what's known as the commodity prices page, and it's going to show me tabs for all of the different groupings. So this, I guess we'll just go to grains first. This is going to show me all the grains future prices. These are all the different, there's corn, there's soybean, there's wheat, there's hard red winter wheat, spring wheat, oats, rough rice, canola. So this is all grains. And we can click on a lot of, different ones so you can see the different groupings in them. So if I click here, I'll go to currencies. It's going to show me, populate all the currencies for me. Those are all your currencies. Then I'm going to click on energy. It's going to show
And notice they got Bitcoin, Ethereum, and XRP there.
Yes. These are all your energies. That's everything in the energies. And we have financials. This is everything in the financials. They're bringing the cryptos over to futures market, guys. So the cryptos are here.
Yeah.
These are financials. These are your indices. So you got so many different groupings that you can, come in and trade. These are livestock. Mr. Johnny. Mr. Johnny
Yes,
know about Mr. Johnny the livestock man. This is category, Mr. Johnny. Okay.
absolutely.
Metals. These are all your metals. Look at gold and silver, guys. That's where it's the days of gold and silver. These are what's known as the softs. So this is your soft category. So I'll go back to the grains. We'll just stick in one category for now, unless you want to navigate to something else. So it gives you corn, and it's going to tell you the different months. So I'll just click on March, but before we click on there, it tells you the symbol for it, the contract name, the latest price that this is traded at, the change, the difference in the price, where it opened at, the high that it made, the low that it made, the volume, and the last day that it traded. And these are links where it'll take you to other places within bar chart. So if you click on these, you can go to other places. So I'm going to click here, just going to go to corn March, and it's going to give me all of, this is the page where it gives you all of the contract months that you can trade for corn. So every commodity don't always have the same months. So you have to keep in mind, it just differs per commodity. And so it has a cash price market as well. So as you can see, it trades all the way out to December 2029. That's why that's the liberty of trading futures. You could go out really far. So once again, it gives you more detail, your latest price, your last price, your change in price, where the market opened at, the highest that it made in the market that day, the lowest, the previous price that it made the previous trading day, the volume that it has, open interest, and the time that it last traded, the date. When you see a date here in this category, this means this market is closed. It has not opened yet. You can tell when it opens because you'll see it ding and it'll be moving, and this date will go away. Now, two of the most important categories you always want to look at is your volume and open interest. You never ever want to get in a market where, look here, 4 or 5, where it's barely anybody in there. It's the worst thing to do to get into the perfect trade, and it's nobody to get you out of. And you get to the end and you ain't got nobody to sell your contract to or to buy your contract from. You don't have nobody to do that. And you want a market that's very volatile, has a lot of people in that market, a lot of contracts as well. That means that's a volatile market. It'll be a lot easier for you to get out of that market when you get ready to. So that's very important. Never just come and click on this and just go in and put your trade. Always put your eyes on these categories right here. That has happened to me before. That's why I can say that. Me and Dr. Melvin, we have been through that before. So you never want to go through that. So make sure you pay attention to that. Okay, so I'm going to click on March. And this is going to take you to the price overview page, which is the contract specifications below. So up here, Mr. Johnny, do you want to take it from here?
Yeah, this is an important page. This is where you're going to get all your real information. So, of course, we've got a chart here that kind of just gives you a look, and it gives you your price, open interest, gives you this stuff. But let's scroll down a little bit more. Okay. It'll give you a little overview of the latest news. So, corn futures closed Friday session with a contract pulling off midday lows, but still down 2 to 4 cents. And it just gives you some news. All right. But then you get down to what it's called contract specifications. Now, the other day when we talked about leverage, how you're going to leverage your money. All right. So this is a corn contract, and the contract size is 5,000 bushels. Now, when we teach this class, we try to teach you some simple things. And let me give you an example. When I tried to learn Spanish, and we're always trying to translate Spanish, if you ask me what's a table in Spanish, and I have to go table. Oh, it's a mesa. All right. But if I'm thinking in Spanish and I see a table, I see a mesa, right? Um, my favorite joke on that is, do you know what a chair is in Spanish? And if anybody remembers the movie, White Man Can't, was it White Man Can't Jump or something? It says, see ya, wouldn't want to be, but anyway. So if we're thinking in points, then we don't have to go calculate what a point is for a specific contract. So I want to talk about two sides of this. So we've got 5,000 bushels that we're dealing with in a contract, right? A tick size is 1/4 cent per bushel, right? So if you take, what is 1/4 cent? 0.0025, right? And if you multiply that times 5,000, you get $12.50. Okay? Now, why are we dealing with this? We're going to be trying to figure stop loss. We're trying to figure out how much money we're making. So we want to know for every tick, what is that worth? And what is a point? Right? So if 1/4 cent is a tick, right? 4/4 is a penny. And if you multiply 12.50 times 4, right, equals $50.
$50.
All right. So if we're looking at corn and it goes up a penny, we know we either made or lost 50 cents. So I don't got to calculate so much times 5,000 equals, right? So we just want you to know that each point is worth $50. Each tick or each 1/4 cent is worth $12.50. All right. And that's what these specifications tell you. Then it says the trading hours are from 7 p.m. on Sunday night to 1:30 or 1:15 on Friday afternoon, divided by a rest period between 7:45 and 8:30 in the morning. So it trades from 7 p.m. Sunday night to 7:45 a.m. Monday morning, right? And then it opens back up at 8:30 to 1:15. All right. It also tells us what our margin is. So our margin is 1,072. So you have to have 1,072 in your account before you can make that trade per contract. And then you have to maintain 975 in your account. First date or first notice is for this contract is February 27, which is 26 days away. And the expiration date is March the 13th. So we know we have 40 days in this trade left to go. That's our time. All right. The less time, the more risk. Okay. The next little chart is the difference between this year and last year. And then the next chart is the commitment of traders. We talked about commercial traders. These are the positions that they have. 774,515 that are long and 721,823 that are short. The producers, that's how much they're in it. The managed money or the large speculator, right? It shows how much they're in it. The non-commercials, all right, which is, the short speculator, that's what they're in. And then other reportables and the swap dealers. So it tells you where we're at. But if you don't mind, would you go back up just a little bit? See where it says contract specification, it says see more?
Mm-hmm.
Click on that, please. All right. This is going to be a more in-depth information that you have. It's going to give you your symbol, right? The exchange symbol, the contract, the exchange where it's traded, tick size, margin and maintenance, daily limits, and this is important. How much can this move up or down before the stops lock in to close the market for a period of time, right? So on corn right now, the daily limit is 30 cents. If it moves 30 cents up or down, the market would automatically close for a period of time. When it opens back up, it would open up in an expanded range of 45 cents. Okay. Shows you the months that it's trading, the trading hours again, and the point value of $50 per point. And then it gives you a description of the commodity. Okay. This is good information you need to read when you're looking at trading a specific commodity.
Hey, Johnny, question,
Yes, sir.
man. So this contract specification would every commodity that's traded on the futures market, would each one of them have their own contract specification?
Absolutely.
So
Okay,
you would
because everything's
you would go to
different.
this every time, right?
You would go through this on every commodity that you would want to trade in, because different commodities have different contract sizes, which would change the tick size and the point value. They trade different months. They're going to have different. I would say the majority of them have relatively on the month, the closing and expiration dates, and they may trade different. One may trade every quarter, one may trade, every month.
Thank you, Mr. Johnny. You just answered my question that I had for you.
Yeah, and one may trade 24 hours a day. For instance, well, we can go through the specifications, different things, because certain markets don't really close. They trade all the time.
Let me see something for me. Dr. Melvin, anything you want to say about bar chart?
Actually, not really. The only thing is on the contract specification page on the short form. Put it in, yeah, click price overview. Yeah, scroll up a little bit more. Scroll up. Bring the page up so I can see the contract the point value area on the bottom. There you go. Okay. Normally, like when we look at a certain contract, this section right in here, we copy and paste it into the chart section. So you're not flipping back and forth all the time and making yourself dizzy. Because once you find a formation that you like and you work up a chart and you want to get in a trade, you want everything in front of you. You want your point value in front of you, your margin of maintenance, all the things that you need to put a trade together. And so we don't flip around a lot. We copy and paste this information into the chart section. And so you have, as you're looking for your different formations, you have all the information that you need before you as far as what you're going to need to get into a trade. And so I'm more on the practical side of
I was Dr. Melba, excuse me. Barbara, can you scroll up just a little bit and click on the the full chart? Now, we're going to be teaching, basically the technical aspects of this, and this is what she's talking about. So, can you kind of explain a little bit what you're talking about here?
Oh, you talking about the copy and paste?
Right.
Yeah, so pretty much this is your technical analysis chart on bar chart. And so each one of the contracts is going to have a chart on it. And either you're going to have bars or you're going to have candles, depending on how you set up your charts. But you see the T on the side in that column to the left? When you click on that T, you just click and right click on the chart and paste. And it'll paste for you on the chart pretty much, or you can use it to text to put in what type of text that you want to put in your chart. So pretty much everything that when you're looking at your chart, everything that you're looking on your chart is in front of you, so you're not flipping back and forth between pages, and you can concentrate on actually evaluating your chart and the market.
Awesome. Thank you, Dr. Melvin.
Okay, back to you, Devin.
Okay, well, we want to talk about the fact that when we on bar chart, so you may have seen me post a chart in the group, and I post a chart, and then I say keep watching. And every time I post a chart and I say keep watching, I'm posting a chart that I'm watching. And when I'm watching the chart, there's some place where I post where I take and add these charts so I know what it is that I'm watching. Barbara, can you take us to show us where can you have a list of what you're watching in the market.
This would be called your watch list. So here you'll find the tab up here and here. You know you haven't added it if this is just a white star. So I'll click it and I've already created a list. I can click there and I can add it and it adds it to there. And so if I come here and click here to watch list, it's going to show me everything that I've saved in this watch list. So that means anything I do on the chart, it'll save it for me. I can come back here and pull it back up.
You get an email at night too, don't you?
So I want to, before we jump off bar chart, I want to look at something and make sure y'all kind of get an understanding on when you go to look at bar chart and the market's open and the market's trading. Matter of fact, Barbara, can you go to the metals? Can
They're
everybody
open.
see? Can everybody see that prices are moving and changing?
Yes.
Yes.
That's what you're gonna see when the market's open, and when the market's closed, everything will just stay the same. But this is because the metals are open. Remember how Johnny talked about the fact that market opened on Sunday night and then trades until the AM and then closes and reopens. So this is what's called a night session. And then it trades and then closes and then reopens for the day session. So you have a day session and you have an evening session. But when the market's open, you will see these prices moving and lighten up because the market is trading. Now, there's something called real time when it comes to trading in the market. When prices are moving, if you're looking at what's called real time, you will literally be looking at the price where the market's actually trading at when you watch it real time. So I want to make sure everybody understands the bar chart is what's considered delayed time. So the market is open and trading, but the prices you're looking at are delayed by 10 minutes. There's a 10-minute delay. All right. So that's the reason I wanted to go to the metals because they're already trading. So right now, those grains that we just looked at, the corn is actually opening up right now and getting ready to start trading. But if you're looking at bar chart, you'd be saying, well, if it opened up at 7 o'clock, like Johnny said, why is the prices not moving? That's because at 7:10, that's when you'll see the market start moving for corn. Unless you're looking at a platform where you're looking at real time at 7 o'clock, you'll see real time, you'll see the actual price start moving right then. Anything you want to say on this, Johnny?
No, that was the point. I wanted to make sure that everybody knew that prices were delayed here.
Okay. Did we forget anything, Barbara, that you wanted to talk about, cover? I think Brenda said she just purchased the manual.
Excellent.
Congratulations.
Excellent. No, we'll be staying in bar chart going forward, so you'll
Yeah,
see more and more of it as we go through the calls.
absolutely. We'll be going here on a regular basis. Um, so open up your free account on bar chart and spend some time, if it ain't but 5, 10, 15 minutes a day, spend some time on bar chart, get familiar with it. Because it's really user friendly. That's one of the things I like about bar chart. It really has a lot of information on it, but it's not difficult or complicated to use the platform. So
One thing I would recommend is think of some commodities that you might be interested in, you know, grains, uh, gold. And the other thing that you might want to look at is what your margin and maintenance is. That will tell you what contract or what commodities you can play in, depending on how deep your pocketbook is. What margin is what? You know, and then we'll teach you about minis and micros, where that even though you might not play in a full contract, you might be able to play in a mini or a micro.
Hey, Johnny, with the mini contract and the micro contract, would that have the same margin?
No, no, it's going to have a different margin because you're dealing with a smaller amount. The contract size is going to be different.
So I know you mentioned $1,000 for that full contract. So the mini and the micro will have a less margin than that, right?
Correct.
Yeah. So
I hope so.
yeah, Johnny mentioned, just go on there and just take a look at some commodities. Just think about what commodities have you used today since you woke up, and just go look at them. But spend some time on bar chart. I'm telling you, get familiar with the platform. But let's open up any questions. We right at the hour. Any questions or comments about what we went over?